called Financial Inclusion, World Trends and Practices, and we have really distinguished experts speaking on the panel. I invite them on the stage. They are Greta Bull. She's Director on Finance Competition and World Innovation Practice of the World Bank Group. It will be easier for you to take these steps. Also, Melanie Williams, she's coordinator on the issues of national financial inclusion of the Technical Secretariat of the National Council on Financial Inclusion of Jamaica. And Payal Dalal, she is Vice President, Global Programs, the Center of Inclusive Growth of the MasterCard. Give them a big round of applause. Just for coming here and for being ready to share with us. And I'm sure that your applause after they have spoken will be even more pronounced. Before we launch our discussion in earnest, I have a question for you for which I will require an answer within 30 seconds from every one of you. The motto of this forum is "No one overboard." Imagine that you have noticed a person overboard. What do? You jump in and try to keep them afloat. You throw them a rope, or you tell the captain, "Speed up. We don't need those people." Or maybe you have your own option. Who'll start? Miss Williams. 30 seconds.
Thank you for that question. Good morning, colleagues, Excellency, Governor, thank you so much for having me. Quick answer, you should do more than throw a rope. I think you need to get out in a dinghy and actually go to them and get them in there. Why do I say that? When building an economy, if you do not include all, you run the risk of having parallel economies, as happens in Jamaica. We have a large informal economy, up to 45% based on 2006 data. It's huge. And we have a formal economy. Now, what does that mean? It means that everything in the formal economy is at risk. Think of issues to do with money laundering. Think of issues to do with the ability to invest in formal instruments. You create also the potential for social unrest and tension. So you need to build together. And it allows for a unified approach in terms of a vision for a country and advancement.
And I'm sure you will extrapolate on this when you have your 8 to 10 minutes of delivering main messages. Ms. Dalal, your option.
I think it's quite simple. So absolutely you throw them a rope, but you also figure out why they were overboard in the first place. So what is the context? How do you improve the enabling environment? How do you improve the regulatory framework so that there are fewer people in the water?
Thank you. And Ms. Bull.
Yeah, I would very much agree. I think you throw them a rope and a flotation device because it's all about having the tools to cope in rough seas as well as easy waters. So I agree.
In dealing with rough seas, I'm being told there is also an option when you pour some oil on the water so that the waves subside. And this, of course, tells us that this thing needs a lot of investment. Yes? And now our distinguished speakers will have up to 10 minutes each to deliver their main messages. We are eager to learn about best practices in the world, and also maybe you will venture your opinion how applicable they are in Ukraine. I'll ask Ms. Bull to start, and if any one of you wants to use the rostrum, you're welcome, and the clicker for your presentations is on the table.
Good morning, everyone, and thank you very much for the opportunity to speak with you today. This is really quite personal for me. I actually lived here in Ukraine, in Kiev, from 1990 to 1995, And yesterday was my first time back in 20 years, so I spent about 2 hours wandering through the streets of Kiev and literally couldn't recognize anything. So it was really fun, actually, to come back, and great to speak with you here today. So my job today is to give you a high-level overview of what's happening in the field of financial inclusion, basically over the last 30 years, and what forces are shaping how financial services will be delivered in the future. I'd like to start by just briefly introducing CGAP. So I am the CEO of CGAP. I'm also a director at the World Bank. CGAP is the consultative group to assist the poor. It is a think tank that's housed in the World Bank, and it focuses on financial inclusion. We're a consortium of 30 member donors, and we started in the area of microcredit and have moved into financial inclusion and fintech in many new ways in the last 25 years. So let me just dive right in. Financial inclusion has actually been around for a while. It got its start in the 1970s in places like Bangladesh, Bolivia, and Peru when it emerged as microfinance, which was a way of providing small amounts of credit to low-income people for productive activities, often with a group guarantee that helped ensure high repayment rates. Since that time, microfinance has spread around the world and is now a $100 billion industry with over 115 million borrowers and 99 million small depositors. It's a large and growing impact investment class with $16 billion under management by specialized investors. Although microfinance is no longer the center of attention for everyone, it did teach us a few important lessons. First of all, poor people are creditworthy, and there's ample demand for credit and savings in low-income populations. This was not obvious at the start of the journey. There are business models that can scale, that can do this profitably, but it's a difficult equation to make work commercially and at scale. Where it's had its greatest successes, it's been thanks to a combination of demographic factors, investment, and a favorable regulatory environment. In these markets, like Latin America and Eastern Europe, Bangladesh, India, and Cambodia, MFIs have grown to be mainstream, often operating as community-based banks serving low-income populations. But in Africa, microfinance has been a tough equation to make work. Populations are rural and geographically dispersed, incomes are low, and regulations are changeable. This has made it tough for microfinance institutions to thrive and grow. But they've been challenged by recent entrants, and that takes us to our next stop in this world tour. In 2007-2008, the world of financial inclusion was rocked by the introduction of M-Pesa in Kenya. M-Pesa was originally conceived of as a service that would support disbursement and repayment of loans by microfinance institutions. But a surge in money transfers that came out of post-election violence in early 2008 demonstrated that there was strong demand for money transfer services. M-Pesa was repositioned in 2008 around a value proposition of send money home, and it hasn't looked back since. Since that time, mobile money has spread across Africa, as well as to many markets where banks were absent in the mass market, like Haiti, Paraguay, Pakistan, Myanmar, Bangladesh, and the Philippines. As of December 2018, the mobile money industry was represented by 272 deployments in 90 countries. The industry had 866 million registered accounts and was processing $1.3 billion in payments every day. While the core value proposition still centers on payments, providers began adding digital credit and savings products at the end of 2012. Today, we don't have a clear idea of the size of digital credit in Africa, but the few data points we do have suggest that it's grown at a remarkable pace, although it's not clear that it's always been to the benefit of poor people. What is clear is that mobile money has had a huge impact on getting financial services to the poor, especially in Africa. According to the World Bank's fintechs survey, between 2011 and 2017, account ownership across the continent grew from 23% of adults to 43%. And in Kenya, you can see the impact that M-Pesa has had, with account ownership growing to 82% of the population. These gains started in East Africa, but they spread quickly to other parts of the continent, with West Africa making the most rapid gains in the latest fintechs survey. The send money proposition has meant that these services have penetrated into rural areas where many Africans live. M-Pesa was a pivotal innovation and brought important lessons for the financial inclusion community. Whereas microfinance was led by credit, mobile money was led by payments. It was able to reach scale because payments were a service in which pretty much everyone saw utility. Importantly, payments generate data trails that are foundational to many other services. Secondly, mobile money was never just about technology. Transactions take place over a phone, it's true, but they're underpinned by a large network of cash-in, cash-out agents that allow poor people to turn cash into digital money and digital money back into cash again. These networks are a crucial interface between the cash and digital economies, but they're expensive to run. Technology is an enabler, but distribution is a key to success. In mobile money, regulation matters a lot. The evidence makes a strong case that enabling regulation is important for inclusion. But mobile money has changed the way financial services are delivered, and regulators are struggling to keep pace with the process of change. Finally, and crucially, providers have recognized that the path to future success depends on operating as a platform and integrating the services of third parties. Mobile network operators are undergoing a transition where they will provide the connectivity and payments functionality for others delivering services over their digital rails, integrating not only financial services, but also social payments, ride-hailing, and e-commerce. Which takes us to the next stop in our financial inclusion world tour, China. In China, internet giants Alibaba and Tencent have changed the face of financial services delivery. But these services grew out of other industries entirely, in the case of Alibaba, from an e-commerce business, and Tencent from gaming and social media. Let's take a look at Alibaba to see how e-commerce gradually led to the emergence of a financial services giant. Alibaba was founded in 1999 as a website to help small Chinese companies sell internationally. In 2003, Alibaba created Taobao, a retail shopping website. Alipay, an online payment platform, was added in 2004 to support the e-commerce business, which was initially operated on a cash-on-delivery basis. In 2008, Taobao opened to third-party vendors, creating a marketplace where people could sell their goods via the internet. And in 2011, Ant Financial was established as the financial services subsidiary of the company, and a full-service digital bank, MyBank, was launched in 2015. Today, Alibaba has 552 million customers, making it the world's largest e-commerce company. Alipay reportedly processed around 23 trillion in payments in 2018, which is 3 times the amount processed by Visa globally. And Ant Financial claims that 700 million people access its payment services, and 11 million MSMEs and 100 million consumers have received loans. China brought another series of lessons in financial services delivery. Financial services are not necessarily an end in themselves. They're a means to an end. In China, they emerged to support strong consumer demand for e-commerce, gaming, and social media. QR codes and online purchases drove a breathtakingly rapid change from cash to digital. It is actually difficult to use a credit card or cash in Beijing or Shanghai today. Payments are largely made by mobile phone. China is very much a winner-takes-all market. The 2 internet giants continue to jockey for dominance, and that's rapidly extending into neighboring markets, with investments in tech-enabled finance and distribution businesses in markets from Pakistan to the Philippines. They take a long-term view, and they're prepared to spend lots of money to gain dominance. It's all about market share. The Chinese success story raises important regulatory questions about market contestability, data privacy, and the uses of scoring. Finally, we arrive in India. India is demonstrating the ways in which open infrastructure and thoughtful regulation can change the landscape for financial services delivery for the poor. India's financial inclusion solution centers around 4 interrelated elements based on technology. The base layer is the Aadhaar ID, a biometric identity system that provides portable identity for every resident of India. This can dramatically lower the cost of onboarding and authenticating users. The next layer is a bank account. Every Indian citizen has the right to a simple account, the opening of which is often triggered by a social payment. These accounts are portable, and a new type of bank license was issued in 2015 to encourage cash in, cash out, and payment services for the mass market. Beyond this is a unified payment interface, a digital payment system that is open to all authorized providers, facilitated by simple payment addressing protocols. A number of large tech companies, including Amazon, WhatsApp, Google, and Ant Financial in the form of Paytm, are providing payment services over this collectively owned infrastructure. Launched in August of 2016, volumes are currently running at 733 million payments a month and continue to go rapidly. Finally, India has also included a DigiLocker, which provides every possessor of an Aadhaar ID with 1 gigabyte of secure cloud storage for key documents. While not explicitly designed for financial services, it's been used for e-signature by a private bank. In the not-so-distant future, you can imagine that this or a private data aggregation service could handle validated personal credit information. The Indian experience has taught us a number of important lessons. Removing friction from the provision of financial services can create a huge stimulus. The technology stack, combined with rapid uptake of smartphones and Reliance Jio's disruptive decision to provide free data, has made India's digital economy take off. The openness of India's market infrastructure means that it will be difficult for any one provider to dominate. Although the internet giants have all entered this market, they will have to compete on the quality of their services to gain market share. The network effect is built by the infrastructure, not by a winner-takes-all provider who won't let others access that information and infrastructure. Finally, data is central to the Indian experience, as is regulation. The Indian government has moved quickly, but is also engaged in a thoughtful conversation about the centrality of privacy and consumer protection. In combination with Europe, thanks to PSD2 and GDPR, India is shaping the global debate on privacy and the ownership of data in the digital age. In closing, I want to leave you with three main thoughts. Firstly, technology, new business models, and regulatory innovation are all coming together to drive very rapid change in financial innovation. Platforms, connectivity, and the ability to structure and extract insights from data will be key drivers going forward. Incumbents potentially all have a role, but they must adapt to technology to survive. Many fintech innovations have not yet been put to the market test. Most will fail, but a few will succeed and will help change the way finance is delivered. Secondly, while these advances bring many benefits, they also bring new risks, especially around consumer protection, competition, data privacy and protection, and cybersecurity. They also raise important questions about how we think about prudential regulation in a digital world. Regulators have a challenging task to keep on top of all of this change. And finally, although we've made a lot of progress on financial inclusion in the last 30 years, the economics of reaching the poor remain stubbornly vexing. Continuing to make inroads into financial inclusion will require sustained investment from both government and the private sector. This is a long journey, and we're only halfway there. We still have a lot to do to bring meaningful financial services to the poor in every country in the world. Thank you very much.
Thank you very much, Mrs. Bull. And of course, the mention of Alibaba evokes some reminiscences about fairy tale world, and we will talk about this as well. But first, let's listen to Melanie Williams. I remind you, she's from Jamaica, and she's coordinator on national financial inclusion in the Technical Secretariat of the National Council for Financial Inclusion.
Good morning again, colleagues. I'm going to use Jamaica as a case study for you, particularly from the perspective of a central bank. So we took 4 years to develop our national financial inclusion strategy. It's a long-term investment. A great deal of stakeholder consultation had to happen with the private sector, with NGOs, as well as across the ministries. Although it is a Government of Jamaica strategy, the central bank is charged with being the coordinator for implementation. And this national financial inclusion strategy was also developed in conjunction with the World Bank. We actually had a reimbursable advisory services agreement with them. They did in-depth supply and demand-side studies that informed the development of this. In fact, we had a developmental FSAP and technical notes that allowed us to then build the strategy. Critical for you, when you're now coming to implementation from a practical perspective, you're going to need strong political support. You're going to need a champion within government. Without that champion, it may be your Minister of Finance, as in our case, and our Prime Minister, but you will need that leadership. You're also going to have to develop the regulatory environment, which Ms. Bill just spoke to. And that requires a shift from thinking of just a prudential supervisory model as a central bank to actually now shifting to market conduct. In terms of data, periodic gathering of data is critical. The strategy, you may have an ambitious timeline of 5 years. We're a small country of 2.8 million. We're a fraction of you. Let me tell you, we've had to extend the project longer because we've had to periodically gather data, especially on the demand side. It's a challenge. In terms of it being consumer-driven, it cannot just be a top-down strategy. If you do not have the buy-in of your population, if they don't even understand what the term financial inclusion means for them, what's in it for them, they will not give you their support. And our consumers vote. So this is important. They vote based on issues that are relevant to them. So this strategy has to be relatable. The administrative machinery within your central bank, please consider building out a unit or a project team that is staffed by technical experts who will have different functions, both in terms of coordination, communication, gathering data, etc. I hope I'm pointing it to the right place. Okay, so what have been our achievements? The strategy was launched in 2017, March 2017, by the Council. And to date, we've seen a 21, we'll round it up to 22% increase in the number of access points per 10,000 adults. Jamaica is unique. We have both an access challenge as well as usage. We're a tiny island, but you find the access points are concentrated in the urban centers throughout the island. Kingston, the population there, which is our capital, is 1.3 million of the 2.8 million. So when you go outside of Kingston into the rural areas, you may find 1 or 2 ATMs. You may have one bank. So to give you that practical consideration, persons will be living up on a mountain in the rural area. They'll pay taxi fare to come down and go to an ATM, and if it's not working, your financial inclusion strategy has just gotten a hit. So I'm being very real for you. In terms of your adult population, with the collaboration of the Inter-American Development Bank, we finally developed our National Financial Literacy Action Plan. Why is this so relevant? For you in the Ukraine, we share many of the same challenges. We do not have, I found this out this morning from a great conversation we had with the head of your financial literacy in your central bank, that you don't have a module in your school curriculum that treats with financial literacy. Neither do we in Jamaica. What we do have is with the Financial Services Commission, a collaboration with the Junior Achievement. They have an after-schools program, and guess what? It's only business students who are in that program. So if you are like me, a lawyer, which means you were primarily arts, or if you're a scientist, you don't get exposed to that as a child. So you are financially illiterate when you hit university. You're academically bright, but you don't understand money. So that's where we want to move. We're facing the same challenges you're facing. And in terms of the credit bureaus, we say an expansion from 23% as at the end of December 2017 being covered by a credit bureau to 43%. And that was driven by the actual credit information providers themselves, the lenders, seeing the benefit to pushing data to the credit bureaus as well as pulling data. We don't have a mandatory system. We want to eventually get there, certainly from the financial inclusion arm of it. And this is where collaboration, again, with the multilaterals is quite relevant. Our challenges, Ms. Bowles spoke to a very important one that we're facing in Jamaica. We have a very sophisticated payments infrastructure, but we do not have interoperability. And for your people, cash will always be king, especially if you have a large informal economy, if they cannot have the confidence that when they present a different payment mechanism on one platform, they'll be able to cash out on another. The user case has to be from the perspective of the consumer. In terms of granular data, we, again, are at the beginning of our journey. We have developed and tabled a data protection bill. And again, persons have to have the confidence that when they give information, their information is going to be protected from cyber attacks, etc. And you, therefore, will have to give them that confidence in order to gather data on a periodic basis. Also, the informal economy. I'm not sure how the Ukraine is about this, but let me share with you Jamaica. People hear central bank. People hear the Bank of Jamaica wants you to give information, and they immediately translate that into the tax authorities. People hate taxes. They hate it with a passion. If they think that you're going to try and gather data for the purposes of punishing them for not paying taxes, you will get nada, nothing. So you have to build the user case. And the user case is driven by understanding the needs of the micro-entrepreneur. So you say to them, by giving us data, we are going to be better informed so we can remove the barriers to your now registering your business, getting access to incentives for your inputs so that you can actually now develop the products that form part of the supply chain. You can benefit by getting access to global markets. This is how we are going to help you. So they gain for what they are giving. The user case has to be made. Trust deficit, we had in the 1990s, our financial system took a major hit. It was actually the effect of contagion risk coming from insurance market into our banking system. And what that meant is that a lot of people look at our banks, beautiful buildings, very formal, very imposing. We're not talking to you. 78% of the population will have a bank account because they get their wages through a bank account, but they use their bank accounts as cash dispensaries. They pull out all the money, and then they go to their local member-owned credit union, and they deal with their credit union. So your financial inclusion strategy has to be more than just your banks. And if you're unfortunate enough to have the name bank in your central bank, as the Ukraine, National Bank of Ukraine does, we share the same pain point, you're going to have to really make an effort to present a face as a regulator that you too are inclusive. And that's important because it's all of the financial institutions that your population will deal with. They have to be part of the machinery for designing your strategy and implementing your strategy, and then you gain success. Where you have a member-owned institution, such as a credit union, and where you have a development bank, you'll find increasing uptake of financial products and services, which brings us to the need for suitable products that match the life cycle of a person when they want to acquire a home, when they want to finance further education for their children, because consumers are rational. I know that we have invested a lot of time. In fact, we had a great conversation about bounded rationality. Very true. But if they know they need to feed their child now, as opposed to putting down that money for later, they're going to feed their child now, and they should. So you have to find a way to create a product that matches their cash flow. Similar for the life cycle of an enterprise for a business, especially a micro enterprise. So lessons learned from the implementation side. I won't go through all of these. I anticipate, of course, that you will have the slides. And we've covered quite a few of these. Strong political support. Make sure you have realistic implementation deadlines. In Jamaica, we have a broad strategy that covers agricultural finance, MSME finance, housing finance, responsible finance through savings, pensions, and insurance. It also touches on consumer protection and financial capability, the ability to do, again, a great conversation. I'm going to, as in cricket, kind of bowl it to you, so you're going to hit that one pile next. But it's important, private sector machinery. But what does that mean? When the Ukraine embarks on its financial inclusion strategy, feel free to prioritize the items that you want to deal with first. Get your wins. Build your case. Make that gold first, and then you scale up. It is best to have real tangible wins that make sense to your population first. Therefore, financial literacy, big win, huge win. Everybody can agree that we need to understand the products. We have some banks that issue booklets that are about the width of my thumb with every single fee that they charge, and nobody reads them. I read it because I'm a lawyer, but nobody else is going to read them, believe me. The language used to describe the product is so confusing, forget it. So we moved as a central bank to actually having a code of conduct that built on the banks having developed their own code of conduct. And what that meant is you have an illustrative example of how interest is going to be calculated. Simple, key fact statements. What does this mean? What does it even mean? To whom do I complain when I have an issue? How quickly can I get resolution? So I heard that being mentioned by your governor, the governor of the central bank this morning. Excellent. You need to have ease of resolution. And the role of the central bank is both in terms of having the translation through monetary policy, the signal rate, as well as making sure you're a strong regulator, because you can do this. But don't try to do everything at once. That has been the experience from Jamaica. I'm sure if we could go back, we have gone phase 1, phase 2, phase 3. We're doing that now in implementation. Your private sector is actually your best friend. They are your partners. Your NGOs keep the private sector and the public sector honest. Everyone has a role. Your consumers are the center of this, and they're the center of your economy, so bear that in mind. And you're going to communicate to the public what's in this for me. When we do our outreach, we're now going throughout all of Jamaica. We have done 2 parishes so far. We were colonized by the British, so we use similar terminology. You know, we're independent, but we have parishes. And what that means is that when you go out and interact with a person, and you hear at that point, I can't even open my bank account. I'm a hairdresser, and they won't even let me open my bank account in a commercial bank. Why? Because they want 3 references, and as Jamaicans jokingly say, a vial of blood to prove that you are who you are. That is a problem. Make life simple for people. We're moving to having graded customer due diligence requirements. Okay, so who are you? We can identify you. And how can we verify that you are who you are? You may want a letter from your school principal. Use your school ID. As you improve education, you'll find your younger population, and your population is really young. I walked around to yesterday after I got off the plane. Your city is beautiful, beautiful. Very young people. I can imagine many people are living at home with their parents, paying no bills. You don't get a utility bill in your name. But if you have a student ID and you can get a letter from your employer, that should be enough to open a bank account or any other account with a payment service provider if it's a non-bank. Use the language of the people. There's nothing more confusing, lawyers do this too, than when we speak in the jargon of our profession and we feel most noble and gratified. And in law, we use Latin. And the judges had to come back and tell us to stop using Latin. Nobody cares what you're saying because we cannot understand you. You're talking to yourselves. Economists don't suffer quite to the same degree, but you may find yourself at risk. Be warned. Have a marketing specialist in your communication team. We have that now in the Central Bank of Jamaica. I'm very pleased to hear some of our ads are making great inroads. We're using reggae, we're using the baseline. That matters. Your people need to understand what it is you're saying. Otherwise, they're not even going to listen to you. Also, the feedback you get from them when they understand your message allows you to pivot so that you then target what really matters to your people in terms of the focal point of your strategy. And again, we've learned financial literacy is critical for them. They want financial literacy, they want access to finance, and they want ease of doing business. So they're not all going to bring their land and their cars to get credit, but they may have other items that can be used as collateral. And again, Bank of Jamaica in January of this year issued a new set of supervisory guidance, if you will, that said to our commercial banks, take a principles-based approach when you're in fact doing your credit adjudication processes. You don't have to ask for every single detail. Look at different types of collateral. Is there a secondary market to realize this in the event that there's a problem? Those things matter.
1 minute.
Thank you. So I'm pretty much done. This is my last slide. So jingles, animation, music. We still have movie theaters in Jamaica. Well, although we're 2 blocks down from Miami, we still have movie theaters. What does that mean? We want to get our message, our animated message out there in the movie theaters. So the same way you teach people not to litter, you teach people about financial inclusion. And you can teach them about financial literacy. The doing is the learning for most people. When you are having your financial literacy plan being developed, and this is where our consultant through the IDB, Daniel Hopkins, was really great on this, make sure that you teach people concepts about money. If you tell them, I'm going to teach you how to use money to maximize your ability to gain wealth, that makes a great difference because Jamaicans are afraid of math. So that's important. Outdoor broadcasts, use the language of the people, speak patois when you have to. You have to use their language and use brand ambassadors, faces that appeal to them. So if you need any further information, that's my contact details. Thank you so much.
Thank you very much. You certainly expanded my idea about Jamaica. I still have some questions, but I will ask them after we hear from Payal Dalal. She's Vice President of the Global Programs, the Center for Inclusive Growth MasterCard. And then, after our speakers exchange their opinion about what they have told us, you will have an opportunity to ask questions. So go ahead.
Great. Thank you so much. And thank you so much for including the MasterCard Center for Inclusive Growth here today. We're delighted to be here and share some of our insights. I'd like to start by providing some context. It goes without saying, but I'm going to say it anyway, that poverty really prevents people from achieving their full potential. And by extension, that means society isn't able to fulfill their full potential. And we can't solve the issue of poverty if we don't free people from the perils of cash and financial exclusion. Now, why focus on eliminating cash in the context of financial inclusion? The answer is really simple. It's because cash negatively impacts both individuals and societies. Let's look at the societal level. Moving from cash to digital payments brings transparency to a country, and it helps address and unlock some of the things that prevent GDP growth, like inefficiencies and leakages. It can also unlock innovations because there's availability of better data. At an individual level, cash brings a great cost to individuals. Think about New Delhi. New Delhi's got 11 million citizens. They spend, on average, 72 million hours a year trying to access cash. If we look at the Mexican context, Mexican citizens spend about $127 million a year trying to access cash. What that means is that, in general, unbanked individuals are 4 times more likely to pay fees to access their own money. Now, last April, the World Bank's fintechs produced its annual report. And what it showed was that financial inclusion has increased, which is great news. There are 515 million adults that have entered the formal financial system. And that brings the total population of banked adults to 3.8 billion people. So that's 69% of the world. Here in the Ukraine, interestingly, the numbers are a little lower than the global average. On average, 63% of Ukrainians have access to the formal financial system. So I think what that highlights is that financial inclusion isn't just an issue for low-income countries. It's relevant globally. Now, we've made a lot of progress, but there's still a lot to do. There is still 1.7 billion people who don't have access to the formal financial system, and they're the more harder to reach. And of course, just like other international development issues, women have a harder time accessing financial inclusion than men. So here in Ukraine, 61% of women have access to formal financial accounts, where it's 65% of men. The other piece that's really important to think about is that financial inclusion is the first step. It's about access, but we also have to think about usage. So while we've seen a lot of movement towards more people getting into the financial sector, we have seen millions and millions of bank accounts lay dormant, and I think that is what really prompts the call for financial education and financial literacy, much to what our colleague from the National Bank of Jamaica was talking about. So that's the context. So why does MasterCard care? And the truth is, yes, it's the right thing to do to care about financial inclusion, but we also have to think about the business imperative. Simply put, MasterCard cannot survive in a failing economy. Our business fails when our economies and our local communities fail. And the antithesis of that is that MasterCard succeeds in a thriving world where there's inclusive growth. And so that's why it's in MasterCard's interest to ensure that individuals and micro and small businesses are brought into the financial system. And that's why we made a commitment to bring 500 million individuals into the formal financial system and 40 million micro and small businesses by 2020. So this conversation is about inclusive growth, but you'll notice I come from the Center for, or this conversation is about financial inclusion, but I come from a center called the MasterCard Center for Inclusive Growth. So why is that? And the truth is that the success of financial inclusion absolutely depends on inclusive growth. Simply put, inclusive growth is the idea that economic growth benefits everyone, all segments of society, and that it requires people and businesses to be connected to those critical networks that power the modern economy and that promote productivity. And so the way to think about it is that financial inclusion is the pathway out of poverty, and inclusive growth is the pathway to shared prosperity. So one is transactional and one is transformational, and that's why we want to convene a conversation about inclusive growth. So what is the Center for Inclusive Growth, and what do we do? We are essentially the social impact arm of MasterCard. And while we do have philanthropic dollars at our disposal, we also want to leverage the assets of MasterCard, the company, because that's where we're going to realize sustainable, scalable social impact. One of our key priorities is to really focus on unlocking the potential of micro and small businesses and workers, because we really think that if we can maximize their productivity, we can drive inclusive growth. So what I'm going to do in my remaining 5 minutes is talk you through 3 approaches that we're deploying to help really address the need to unlock access to networks and access of financial inclusion for both micro and small businesses and workers. And this is how we think we're going to transition from poverty to shared prosperity. So the first is around our hypothesis that private-private partnerships are the new future. Now, you have heard a lot about public-private partnerships, and they're absolutely critical to international development. But what we're experimenting with is partnerships between private sector companies that are aligned when it comes to social impact. We think there's real magic when you can not only co-finance social impact, but you can leverage each other's core competencies and assets to look at social impact. So one example I'd like to quickly highlight is what we're piloting in Kenya to really unlock access to finance and credit to micro and small businesses. This is a partnership between MasterCard, the MasterCard Center for Inclusive Growth, Unilever, and Kenyan Commercial Bank. And the idea and the dilemma was really simple. We saw all of these micro and small businesses within Unilever's supply chain, so the corner store that sell the deodorant and the soap, their growth was really hindered because they could not get access to credit, which meant that when they ran out of inventory, they couldn't buy more until they had enough cash in hand. And so what we did is we looked at Unilever's transaction data, so how much these dukas, corner shops, were buying from Unilever. And based on that history, we extended interest-free credit to them for 17 days, very small amounts, just for them to be able to keep their shelves in stock and that so that it wouldn't run out of customers. We kept doing this so that we started to establish this behavior of borrowing and repaying, borrowing and repaying. And on the center side, we spent a lot of time building the capacity of these Duka owners. So not only to understand what credit was and how they should manage responsibly, but also to think about things like how do you manage your inventory and where do you place products on shelves to really maximize sales. Through this borrowing and repaying, they were able to establish a digital transaction history. And we were able to take that digital transaction history to Kenyan Commercial Bank and say, here is information about their ability to borrow and repay. Does that de-risk these micro and small businesses, in your eyes, enough to lend them open credit so they can buy whatever they want? And Kenyan Commercial Bank said yes. And so it was a win for all parties. On the MasterCard side, the transactions happen across MasterCard rails. On the Unilever side, these Dukas were buying more Unilever products. On the Center for Inclusive Growth side, we were actually seeing the growth of these micro and small businesses, and they started to hire more people. And on the Kenyan Commercial Bank side, all of a sudden, we've de-risked a new pool of micro and small businesses for them to lend to. So it's a really powerful example of a model that leverages all of the core competencies of different companies that are also oriented toward social impact. The second approach I wanted to quickly touch upon was our approach in tackling financial inclusion and financial security from an infrastructure lens. And so this is looking at financial service providers around the world. The example up here is what we did with Grameen America in the US context. Grameen America is a microfinance institution that specializes in microcredit for low-income women entrepreneurs in the US. They were entirely manual and cash-based. And what that meant is their ability to scale was limited because it was so manual. And so what we did was a combination of two things. We not only helped modernize the institution itself, so moving things to the cloud, automating processes, but we also digitized the loan distribution. So instead of it being cash in hand, it was on a prepaid card. What that had allowed Grameen America to do was several things. One, they were able to scale quite quickly, and so you'll see they went from 65,000 women to 90,000 women in the span of a year. It also meant that those women borrowers were in a much better position, not only because it wasn't cash, so safety wasn't as much of a concern, but those meetings, instead of it being people lining up to hand back cash and somebody writing in a ledger, those meetings could actually be transformed so that it was about financial capacity building and smart ways to run your business, as opposed to people just queuing up to pay back. And finally, one last example around the worker agenda, because I've talked about micro and small businesses in two of the examples. We recognize that the future of work is changing quite significantly. We're moving towards more of a contract and gig economy, and our infrastructure is simply not built for that. We live in a world now where we depend on employers to help incentivize savings, to help us with our professional development. And so one of the things we want to really make sure is that the future worker isn't put in an economic precarious situation. How do we help update the infrastructure so that they have those social safety nets, they have that ability to train and retrain? And so what we're doing in the UK is we're partnering with the RSA to identify and incubate a cohort of fintechs and social enterprises specifically focused on bolstering the economic security of workers in the future. So these are institutions and social enterprises that are doing things like creating new income smoothing tools, because we know volatility is a much bigger issue in the future of work. These are institutions that are helping the workers think about political representation in a new way. And so that's just an example of what we're doing in workers. I'm going to stop because I see a big time over sign. But thank you so much for your attention. I look forward to continuing the conversation.
Thank you very much. 3 brilliant presentations, a lot of convincing examples. Do you have something to say about your counterparts' presentations? Maybe you want to single out some aspects? Any one of you? Ms. Bull?
Just very briefly, I was impressed at how the messages were all very similar. So, I mean, this is known territory, and progress is being made, but as Payal said, there's still a lot that we need to do.
Ms. Williams? No comment?
Well, just to encourage the audience, especially our colleagues from our fellow sister central bank, in terms of what we've just heard, we've heard the private-private partnership, which is brilliant. I've been taking notes on that. But it's also really an achievable win for you to have. In terms of setting your priorities in your strategy, once you have the demand-side data, not just your supply side, which is fairly easy for you to obtain, but once you have a demand-side study, the partnerships that can be forged with private enterprises, with NGOs, are tremendous. And you can actually really see where you want to tackle within the next few years: financial literacy, consumer protection, regulation of KYC, AML, CFT. Because AML, CFT is one of the big barriers to financial inclusion, financial security. So again, to encourage you that it is doable. It is something that is actually well placed for you as a central bank. And you may find, as the Financial Inclusion Secretariat found, that it will then inform your policy development across the entirety of the bank, both in monetary policy and in supervision. You can actually speak with one voice. Very important.
Ms. Dalal, anything you want to say that you sacrificed for the sake of keeping to time?
I would just make 2 points. I think across all 3 presentations, we saw that none of us were doing things in isolation. We were doing it very much as part of an ecosystem and in partnership with different institutions and different entities. And I think that's an incredibly important point, because we're not going to get to scale and we're not going to get to sustainability unless we take an ecosystem approach. The second point is, I'm really excited Melanie just used financial security and that term, because the conversation that Melanie and I were a part of during the coffee break was very much the phases. So financial inclusion, to me, and this is my and the center's viewpoint, is step 1, because financial inclusion is about access. The next step is about usage, and so that you could argue is financial health. And then the next step after that is financial security. How do you not only bring access and usage together, but you also introduce capability so that you're able to address some of these challenges like income volatility, cash flow challenges, and that you're actively sitting there thinking about, how can I make the digital economy work for me?
Before I open the floor for questions, and you may raise your hands already, I still want to ask our panelists about Alibaba. When we talk about Alibaba, we often forget that there were also 40 thieves. And in order for him to have access to the money, his prospective daughter-in-law had to deal with those thieves in a very, very cruel manner. So how forceful, how cruel, how imposing we should be in moving forward the idea of financial inclusion. And who are the biggest thieves on the way?
I think I'm not going to respond to that last one. Well, I don't think we have to be cruel and forceful, but I think you do have to make clear decisions and take policy actions. And I think Melanie's point about data is super important. That's data for government and data on the demand side as well. So it really is about creating enabling regulation. I mean, Kenya took off like a shot because they enabled what was going on. India has taken a much more interventionist approach, and they're actually creating a much more balanced kind of market where there's really solid competition. The Chinese are making a huge difference. They're investing, they invested in a big way in China, but they're now moving into other markets. They will get to Africa eventually, but they're really concentrating on the East Asian and South Asian markets because there's so much growth to be had. We're only starting this in a lot of places, and there are a lot of consumers that are excluded from the financial system. So there is a real business opportunity, but as Pael indicated, this is good for growth. It's good for people to have access to credit, to have access to payment services, and so it's a win-win. Nobody has to be hurt. But I think the point on consumer protection is super important because what this is doing is showing where the risks are in the system. So digital credit is a perfect example. It is growing so fast. And to your data point, we don't have good information about how fast it's growing. And so while it's great to get essentially credit card type debt into the hands of poor people, people need that kind of service. We need to make sure that there are guardrails on the system, that providers are providing those services with some sense of good customer outcomes in mind, and regulators are keeping an eye on what's going on.
Any other comments?
Just in terms of Alibaba, what you'll find is that the perception may be that the government is Alibaba and that the central bank is doing the bidding of Alibaba. So what you would really want to do is to let them understand that they are actually being empowered. And you can be aggressive about it, having due regard to the cultural context. Financial inclusion actually will also be a catalyst for change in terms of regulatory reform, because you may find that in partnership, as we did with the IMF and with the Inter-American Development Bank, we actually transformed quite a few of different pieces of legislation around movable collaterals, for example, the security interest in personal property. We are now doing a review of the Credit Reporting Act, and as I mentioned, we are also doing a review of our legislation for money laundering. But be measured. Jamaica has a different approach than China because China has a different, as you mentioned, a long-term horizon. This is a 7,000-year-old civilization that has previously conquered regions. So no doubt that would influence their perspective. Jamaica is a tiny little island that had been previously colonized. Our perspective is that we want to always be part of the global market and we want to survive. So therefore you have to pace the change in context based on your country-specific origins. Ukraine is uniquely placed. Be mindful of where you want your economy to go, who are your big players, and where you want to be, and then measure your progress accordingly.
Ms. Dello?
I'm good.
All right. So any questions from the audience? Raise your hands. Otherwise, you will have to listen to my questions. And my next question is, Ms. Williams, you mentioned that you should talk to people in their own language, and you also spoke about confusing language used by the banks. Mm-hmm. But how realistically we have to expect that the banks will talk to us in a clear language when we don't even we can't even make them print the always read the small print in a big print.
Okay.
Sometimes always read the small print. It's small. It's so small that you don't even get this warning. So how to deal with them?
That's a great point. And actually, I remember the first time I read a contract, I read the fine print first and said, smart people read the fine print first. You have to protect yourself. Okay. Every single partner in the financial inclusion network that you will have has something to win. It goes back to your point, win-win. And the commercial banks will speak in the language of their potential consumers once they realize that there is money to be had by creating products that meet their needs. In Jamaica, we have turned the corner. There is tremendous liquidity in the commercial banks. And now we have, I'm hoping I'm not stealing too much of their thunder, but the private sector organization of Jamaica, which includes the Jamaica Bankers Association, is actually meeting on access to finance because they have a pot of gold to sit on and they want to create products that make sense for their consumers, but the consumers don't A, know them, B, trust them, and don't understand the language they use. So when a commercial bank realizes that I can actually make money, they'll change the language they use. The message about language also applies to the central bank. If when you as a central bank speak, the only people who read your publications are businessmen and fellow economists, you have a problem. So you need to change that, because otherwise no one actually understands, as Bank of Jamaica knows our role. We are the guardians of the economy. We have a building that literally sits on the harbor, so we see ourselves as a citadel on the harbor to protect the economy. You have to speak the language of everyone so that they feel included as a part of the conversation. And they will change once they realize their futures are on the line. It's a really great principle of surviving. Why are you here as a central bank? How are you relevant? Tell me in my language and I'll understand.
All right. Ms. Bull?
Yeah, actually, I think it's almost simpler than that. I think if banks don't learn to speak to consumers, banks won't have a reason to exist. All of these services I was talking about this morning, they're being provided by e-commerce companies, mobile network operators, social network. I mean, the way you make payments in China is not done really visibly through banks. It's done through something else, right? And so if you can't learn to meet consumers where they are, you will find your business much diminished, because there are much more agile and nimble providers out there who know how to connect with consumers. And so I think there's a real need for banks to get their acts together if they want to be able to compete in this space. So the innovations come in other markets, it's coming for you. And so if you can't compete with that, you're going to have a real problem.
I agree with everything that has just been said. I will say that banks are now in a much more competitive environment than they were. We are seeing the proliferation of fintechs really cannibalizing banks and their consumer base. And that's positive in a lot of ways, because all of a sudden they're more human-centered designed products, because banks were a little bit more cookie cutter. However, there's a downside too that we have to acknowledge, and that's that a lot of these fintechs are not as heavily regulated as formal financial institutions, which means that while more people now have access to things like digital credit, they don't understand the terms, or the terms are actually unfair for the individual consumer. And so that's why I think it's in everyone's interest to think about language, to think about human-centered design, but to think about it in a way that's going to make sense for the end individual and the end micro and small businesses, because otherwise we get into a similar situation as we were in 2008.
A couple of weeks ago, another very interesting forum took place in this very hall. It was about digital economy in Ukraine. And you know what? They also spoke about cashless and financial inclusion. And one of the speakers there, he made a point that, for instance, in Ukraine, when you come to a restaurant and you want to pay with a contactless or with a card, sometimes you're being told, no, our terminal does not work, the device does not work, pay cash. This is, of course, very, very worrisome. But today, I was in a reverse situation. I went to the tabletочки stall to buy something and to put some money in for a good cause. And imagine that I wouldn't have my card or my contactless device with me, and they did not accept cash. Who will protect my rights in this situation if I want to use cash, as many people do?
Thank you for that great question, because it actually dovetails very nicely with where we are in Bank of Jamaica. We are moving towards a digital economy, but I sometimes hear this term cashless being bandied about as if that is where we all should be. We need to be careful of actually not creating further barriers. If you take the view that it's digital currency and your mobile penetration may be high, but your internet penetration is not, and you don't have the infrastructure for data protection that we were talking about this morning, you could eventually exclude many other people who would be in your rural areas who deal with cash. So it really is about having any type of payment mechanism for the person to choose from and allowing for them to compete and contend. Another very important point, and I'm really glad you said it, Payal, in terms of the whole non-banks providing services. It's all well and good for us to be able to now get services through social media providers, and I'm not going to name names, but we know the largest ones, one of which has a population that's almost half the size of the planet. But to use your social media feed, and we all know we only put the good things on social media, right? So to put up our positive images as our digital footprint and use that to access credit could actually create a serious risk in terms of the economy. So we cannot create unfair barriers. See your population, understand the percentage that use cash, and understand the risk that they are facing, the security risk, the cost of printing and importing, but at the same time give them measured options. One of the great things that MasterCard and Visa does is that they allow a person to gain familiarity with how to use these payment mechanisms and then scale up. And then it allows the merchants to adapt because you're building in everyone in your ecosystem, and that's where you want to go. But there is going to be always, I think, a place for cash, and the consumer protection mechanisms have to be there. I say that from the perspective of a regulator in terms of the central bank, but if anyone else?
You know, I think it's about giving consumers choice, right? And so in most markets, cash still really is the dominant way of paying, but you can see ways that digital means are coming in to make things easier and cheaper for consumers. So my favorite example is the Oyster card in London, right? So the Oyster card was originally introduced, you used it to take the London Underground, you'd have to go buy a ticket, you'd have to wait in a queue, you'd have to look for change. Then they eventually made it so you could buy an Oyster card, you could load the card, it was essentially a prepaid card. Now, I just use an NFC-enabled debit card and I swipe and I go. No queues, no wait, and it's a lot cheaper than it used to be. And so there are real consumer benefits from digital, but you have to make it worth consumers' while. So if people want to use cash, let them use cash. But in some markets, like Sweden, is getting down to the use, 2% use of cash now. And so I think, let demand drive that conversation.
I think that the word cheaper is a key word here. And of course, when you mention this, I think, wow, I don't need cash. But many people, as I, do not often hear this word cheaper. How to reach them? I think that in Jamaica you have a very interesting experience. But I presume that the average level of literacy and outreach in Jamaica may not be ideal.
That's quite true. And our levels of ordinary literacy and numeracy are quite low. So when you're now talking about financial literacy, there has to be a tremendous investment. In terms of the outreach, that is being amped up. It actually started this year with the radio broadcasts and town hall meetings, but more needs to be done. There's also this very important point that you just mentioned. In terms of feeling empowered and feeling heard, you have to ensure that when you're having the conversation with them, that your consumers are not feeling that they're being condescended to or being belittled, and also that they're not being dictated to. The Ukraine sits in a very unique position. You are right in the center of things, part of Europe, part of the wilder global economy. Jamaica is a tiny island that depends on tourism. And the potential for a sense of fragmentation in our society is greater. So therefore, when you're trying to teach people about financial literacy, you do sometimes literally have to take a note. Take a US dollar, because that's our largest trading partner. Explain to them what the exchange rate is with the Jamaican dollar, which they'll pay more attention to because that matters to them. And tell them how they can, in fact, use a different type of payment mechanism, such as a mobile wallet or a card, to actually get it with less cost to themselves, not having to stand up for 3 hours in a line. We still have, and we also have an age issue related to financial literacy. The median age is 29. They'll be more willing to take on the technology. Persons who are older and may not be as well educated may not even want to use your ATMs. So you're going to really have to partner with your regulated commercial banks and teach people it's okay, it's safe. So you're quite right. We're a user case in progress.
Jamaica may be a tiny island, but its contribution to the world culture is great. And of course, being a person of my generation, I think of reggae and all this kind of stuff. But my favorite story about Jamaica is about the bobsleigh team. Yes. Yes. That's an awfully interesting and amazing story on an island where there's no snow, or maybe somewhere in the mountains, they wanted to compete in the Winter Olympics. And they organized a bobsleigh team which eventually made it to the Olympics. How much of the culture of the people is in this story? And
everything. Okay.
everything.
All right, so Jamaicans, how can I put it this greatly? Give the sentiment. We are very competitive. You know about Usain Bolt and Asafa Powell. We learn how to race from we're very young. There's a saying that we can outrun bullets. We're that competitive, and we're the strongest of the strong who survived everything. So naturally, in an island which never has seen snow, and naturally because we have mastered the art of running in tropical climates and Summer Olympics, we naturally wanted to take on the Winter Olympics because what else is there? Let us go and now try to run on ice and snow, having never seen it. And the average Jamaican is deathly terrified of cold. But we're going to do it anyway. And that's why I say financial inclusion is possible. People will tell you no. They told the Jamaican economy and the central bank, why do you need a financial inclusion strategy? It's of no benefit to the poor. They're always going to be poor. The Bible tells you that. Accept it. No, we do not accept it. Just because something is not happening now does not mean it cannot, in fact, be improved upon. And take that similar, it can be changed by you approach, because really, we are the masters of our own destiny, and we change the culture because we change it to meet ourselves. Human beings have changed the planet to meet our needs. You can do the same. So that's the Jamaican mentality. If you tell us, no, we can't, we will. If you create a system that is designed to exclude, we will create our own. Another example, if I may, while Jamaica still grapples with how do we create a digital currency and how do we promote mobile payments, those persons who are actually excluded have figured out how to monetize phone credit. So while you politicians and bureaucrats in the central bank are busy arguing about this, okay, those of us in urban centers are going to take our phone and we will send $1 or $5 of phone credit to each other to buy a slice of bread or a swipe of toothpaste. So while you sit there not moving, the economy is moving, the informal economy is moving. And that's why I encourage you in the Ukraine to really make sure your formal economy steps up the pace and is as adaptive and innovative, because if you don't move quickly, first place will go to the informal economy, and they don't have the same frictions that the formal economy does. So that is a Jamaican perspective, and I certainly think that, I sense that in the Ukraine as well. When I'm walking and I'm seeing what you have done and built, it's amazing. So we can do it.
This is the closing remark from Melanie Williams, but now let's hear from Payal Dalal and then Greta Bull. The closing remarks. Summing up.
Okay, well, first of all, I think this has been a wonderful conversation, so thank you to my fellow panelists and a wonderful moderator in bringing out some incredibly important points. I think we've touched on a lot of the key highlights of financial inclusion and the evolution towards financial health and financial security. I think the key is to really think about how we use financial inclusion to drive towards a more inclusive digital economy. Whether you like it or not, we are all heading towards digital. So how do we help support the most vulnerable populations and ensure that they are the ones that don't get left behind and that the gap between rich and poor doesn't grow? Because I think in a lot of instances, this is where there's the tension and the frustration that you're seeing manifested in a lot of politics. And so I think we have to think now about what the consequences of the digital economy are and how we build the infrastructure, including the enabling environment, the regulatory framework, but how we bring all the partners together to build a system that really makes sense, that is suited, that is designed for the individual and the micro and small business, and how we all work together to achieve that.
Thank you.
Okay, just a couple of quick messages. So the pace of innovation is very rapid in other parts of the world, and it will be rapid here. And technology, new business models, and partnerships, I think, is a great point, are really driving this. The change is coming, so get ready for it. And it's going to be around connectivity, it's going to be around data, it's going to be about giving consumers what they want. And so I think thinking ahead about how to make that change happen is going to be really important. I think on the provider side, making sure that as you bring people into the financial system, you're not harming them and you're in fact helping them to grow. And for regulators, it's really important to be able to measure what you're doing and encourage innovation, but also put guardrails on. And the guardrails are really, really important. We see a very large and growing gap between innovation and regulation, and we're really concerned to make sure that the people who are creating the environment for these financial services to change need to be enabled to sort of help manage it. So, and I think if you put customers at the center of what you're trying to do, then it's a win-win for everybody. Financial services are a tool. Nobody woke up and said, I really want insurance today. They use it for something else. So I think if we all sort of put ourselves in that place where we're an instrument to help create economic growth, then it's a very wide open space.
I'm sure we attentively listened to our distinguished speakers, and there's a wealth of knowledge and experience that we can borrow from them. And even when they do not seem to talk shop, they do give very important advice and hints at what we can do. For instance, Ms. Dalals mentioned discussion during a coffee break. So now you know what to do during a coffee break. Not only enjoy your coffee and cookies, but also you have 20 minutes for discussion, but 30 буде дуже цікава панельна дискусія. Дякую. Thank you very, very much.